Good day, subscribers! Thank you so much for joining me today. I am Jeremy. This is a financial education channel, and today we're talking about is it a buy, and we're doing Fitbit Stock. The reason I decided to do Fitbit Stock today is just because I've had so many of you guys request that I do a breakdown on Fitbit and try to figure out is it a buy, but mainly because I saw Fitbit stock price drop like over 33% today. So since I had so many guys request this video and I saw the major drop, I figured why not take a look into Fitbit and see, should I go ahead and buy some Fitbit shares? Is this something worth going ahead and dabbling? Let's figure this out now, guys. And by the way, in the comments section, leave what stock you'd like me to break down next week. In next week's video, I take you guys entries every week, and depending on what you guys put in there, you have a chance of winning and being the one who can see your stock broken down next week. So we're going to act like we have no clue what Fitbit is like always. Fitbit helps people lead healthier and more active lives by empowering them with data, inspiration, guidance to reach their goals. By the way, this is in the 10K, which is on the Fitbit Investor Relations page. You guys can go to any company's investor relations page you want and see the 10K. Fitbit is transforming the way millions of people around the world achieve their health and fitness goals. The Fitbit Platform combines connected health and fitness data with software and services, including online dashboard and mobile apps, data analytics, motivational and social tools, personalized insights, and virtual coaching through customized fitness plans and interactive workouts. And basically, they're a wearable company. You have a little watch or whatnot that can track how many steps you take, your heart rate, all that kind of good stuff. And then they have an app that I've seen many people use, and they really enjoy it. And that app, you can compete with your friends and your family and say, hey, I did 10,000 steps today. And all the data can be on there, and what your resting heart rate is. All this kind of information. So it's a wearable company that basically tries to help you live a healthier lifestyle by keeping track of how active you are and all those types of things. So let's go ahead and dig deeper into this. Now, the Fitbit platform, let's just read the bold lines here. Tracking activities through our connected health and fitness devices, learning through our online dashboard and mobile apps, staying motivated through social features, notifications, challenges, and virtual badges, improving health and fitness through goal setting, personalized insights, premium services, and virtual coaching. Now, this platform, basically all those lines I just read there, this is what, in my opinion, gives Fitbit some type of competitive moat around the company. Because the little devices they make that can go on your wrist, honestly, most companies can make that. Chinese knockoffs and stuff, it's not complicated stuff, what they do on the wrist. But what they have as a platform where you can keep track of all this stuff, where you can see what your wife is doing and her husband's doing as far as their activities, where you can see what your resting heart rate is, all in a very seamless, easy app. That is something no one else really has. So that kind of gives them a bit of a competitive moat from external competitors. Whereas external competitors, they just sell you a device and then you have to plug that device into your computer or something. Whereas this just syncs up to your app through the cloud and bada boom, bada bing. So that is a pretty cool feature on Fitbit. Now, you see all these bold lines: Fitbit Zip, Fitbit One, Fitbit Flex, Fitbit Charge, Alta, Charge HR, Blaze. They have about 7 or 8 different watches or bands or things like that they sell. Now, when I see that, I see that they have them at all different price points. So whether you want to spend $59, you want to spend $250, they have price points all in between there. Now, judging this from an investment standpoint, I don't know if it's that great of a thing. You have so many devices that someone like myself who doesn't own a Fitbit, how do I know which one to buy? And do I really feel like researching for 3 hours on which one's the best for me? That, to me, I think they have too many devices in the marketplace. I'll just be completely honest. The simpler you can make your lineup, the better off you are usually. Have one really low price device. So have the $59 one, have one medium device, which is $100, and then have one device that's $250 at the very high end. So then you're competing in 3 different areas. But having 8 different trackers or watches and things like that, I think it's really confusing for the consumer. So that I kind of don't like. Now, there is something I think is really cool, And it's a product called Aria, which is a Wi-Fi connected scale that tracks weight, body fat percentage in your BMI. So that's really cool because that can just go to the cloud, and this goes into the whole Fitbit ecosystem, I guess you could say, in the app. So all these type of connected devices, and I think that all this type of stuff is very interesting on how they can just keep building out the business as long as they can provide more and more products. But I think products in different categories is a good idea, like going with a scale or maybe some other products I haven't even thought of yet. But having 8 different bands type trackers, I think that's really confusing for the consumer. I'll be completely honest. I think that's a bad move. I like the scale idea. So let's dig into this some more, guys. Now we're in the risk factors section of the 10K here. And this one we're reading is, we operate in a highly competitive market. If we do not compete effectively, our prospects, operating results, and financial condition could be adversely affected. So we know everybody says they're in a competitive space. If you're a big company, you're in a competitive space, because if you're a huge company, you're probably making a lot of dang money and everybody wants a piece of that pie. So a lot of people are going to be competing. But specifically what worries me about Fitbit is they have 2 competitors who are dominant players, I call them. Dominant players. One is Apple, one is Samsung. If they just had companies like Garmin and Jawbone and Misfit and LG competing in their space, I wouldn't be that worried about it, honestly. I wouldn't be worried about them losing market share or anything. But when you are competing with Apple, which Fitbit does on the very high end, Fitbit doesn't compete with Apple on the low end because Apple doesn't have any type of just like $59 band. They just have the Apple Watch, right? But if Fitbit has the $250 product, the $199 product, those compete directly with Apple. And so Apple has a great chance of winning those customers away. So maybe somebody buys a Fitbit and they're kind of like, oh, this is cool. Maybe this is something I want to do in the future. They might end up just going with Apple in the long run because Apple is Apple. Same thing with Samsung. So when you have those 2 competitors, it's really scary because they're so big. They have so much power. They have so much money. They can put so much into marketing. And honestly, they have generally way better technology because they have 58,000 employees versus Fitbit, which, doesn't have even close to that. So that I really worry about with Fitbit. Now look at this income statement. This is freaking sick. This is the sickest income statement I've seen in a while. The past 3 years, look at how they've grown revenue from $271 million in 2013 to over $1.8 billion last year. Look at net income. They were losing money. They lost $51 million in 2013. Now in 2015, they made $175 million. Unreal income statement. That's one of the sickest income statements I've seen in a long time. Holy smokes. You want to talk about a company with growth? That's just insane growth? That is Fitbit right there. Now, the question is, are they going to grow like this in the future or anywhere even close to that? We'll have to get into that. So now we're looking at the balance sheet. Let's take a look at this balance sheet. So we're just focused on 2015. $535 million in cash, $128 million in short-term investments. They had no long-term investments. They have no long-term debt or short-term debt. So basically, they have what I would consider a very, very good balance sheet. You got about $700 million in cash and investments versus no debt at all. That's a very strong balance sheet. I really like that. Between the income statement and this balance sheet right here, if I didn't look at anything else in Fitbit, I would say this company is a freaking buy. That's a sick income statement, and that's a phenomenal balance sheet. Phenomenal. So now we're looking at the latest quarter. Revenue for last year's third quarter, they did $409 million, you can see there, versus this year, which is in bold right next to it, they did $503 million. Once again, that's very, very good. They grew revenue by over 20%. Very impressive year over year. Diluted earnings per share, unfortunately, was down to only 11 cents this year versus last year they made 19 cents. So they got $100 million more in revenue, but their net income fell. That's kind of a worrisome. They're spending a lot of money on R&D. I understand all that and marketing and all those kinds of things. But at the end of the day, it would be nice if they were earning just maybe a little bit more money than they did last year. And the fact that they dropped by 40%, that's a little concerning there. Now, let's dig into these results a little more. So revenue increased 23% year over year. We just talked about that. The US comprised of 72% of the revenue. So this to me either says two things. One is Fitbit's pretty much just a US company with only 28% of the other revenue coming from international, and maybe that's all is what it will always be. Or maybe Fitbit just has a lot of potential to grow outside of the US market. China and India and Brazil and a lot of these other emerging markets that have tons of people that could probably actually afford a $59 device to wear around. So that's kind of a bad thing right now, and it's kind of a potentially a good thing if they can expand internationally better. Now, other than that, GAAP net income 26 million, non-GAAP net income of 46 million. So they're still profitable. That's a good thing. Now, the business outlook. This is actually what sent Fitbit stock down substantially. So full year, the company expects revenue to be 2.3 billion. And 2.345 billion, representing growth of 25-26%. That's great. That's a great growth rate. But the fourth quarter, the company expects revenue to be 725 million to 750 million, representing 2 to 5% growth. This line is what sent Fitbit stock down 30+% today. That line right there, because you go from a company that has been growing at 20-30+% to now growing at 2 to 5%. People see that and they think, wow, this company is about to be in a decline. They're about to be in a decline. When you see that type of drop off, the next drop off is when you just start going negative in revenue and negative. So that is what is worrisome. That's what's worrisome with Fitbit. That line right there is what sent Fitbit down substantially today. Now, let's look at some of the other key statistics here. Obviously, we see Fitbit had a tough day today. Well, I don't know, that's more than a tough day. But the market cap's about 1.89 billion, so a small company. PE currently is about 18. It's right at its 52-week bottom right now. You can see it was all the way up to $38 at one point. Forward PE of 6, but of course that forward PE, how real do we know that really is, considering Fitbit might not be as profitable next year as they were this past year. So that forward PE kind of doesn't really matter right now. Now, what am I going to say? Is Fitbit a buy? You saw that income statement, you saw that balance sheet, but we also seen the problems that are arising. I love beating down stocks. I love to invest in beating down stocks that everybody gives up on. But unfortunately, Fitbit is not quite yet a buy for me. It's not quite yet a buy. I personally would let this play out a couple weeks and then see what happens. Maybe it drops to that $7 range, and then at that range, I'm kind of like, okay, you know, this stock's been beaten down so much that this is either a great acquisition target or it can just grow in the future, because at that point, the stock is so dang low. It's already very low. And I would say it's close to a buy, but it's just not there. It's just not, I cannot put my finger on it yet. It drops another 10-15% and absolutely I'll start dipping my toe in that. So that covers Fitbit today, guys. Let me know what you think about Fitbit stock in the comments section. I would love to know if you guys think it's a buy, if you think it's a sell, if you think they're going out of business in a few years, or if you think they have a good competitive moat. I want to know your guys' opinion on all this, and leave a thumbs up if you enjoy these Is It a Buy videos. Don't forget to leave the comment on what stock you would like to see next week. And if you haven't subscribed, you may want to. I talk a ton about personal finance, entrepreneurship. I'm an entrepreneur, and I talk so much about the stock market on this channel. Thank you for watching, guys, and have a great day.